Yes, sir.
So what is one
What's the big deal? All right, it is 1:34. I'm going to call the Corpus Christi B Corporation meeting to order. Ms. Huerta, please call the roll.
President Diana Summers.
Present.
Vice President Jesus Jimenez.
Present.
Mark LaRue is absent. Victoria Holland is absent. Johnny Filippello.
Present.
Duke Concello is absent. Claudia Mustagashi.
Here.
Okay, we do have a quorum present to conduct the meeting.
All right. Moving on to item C, public comment. Would anyone like to make public comment? Seeing none, Ms. Huerta, have you received any public comments?
No, ma'am.
Great. Okay, moving on to item D, the minutes. Are there any corrections to the minutes? If there are none, I'll entertain a motion to approve the meeting minutes.
I motion.
Is there a second?
Second.
All in favor say aye.
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 Any opposed say no. The motion carries. All right, moving on to item E, the financial report, the Type B financial report as of November 30th, 2025.
Thank you, Madam President. Sergio Villasana, Director of Finance and Procurement, here for the presentation. We do have one correction to the financial statements included in your agenda packet. The housing fund balance sheet had a row hidden for the accounts receivable of $108,000. We did hand out a revised balance sheet for that statement. No other changes are needed for the financial statements, and as far as the fund balance and net assets, there's no changes there. It's just a hidden row that wasn't appearing on the statements. So included in the agenda pack are the remaining of the unaudited financials as of November 30th, 2025. You should have received a kind of a cheat sheet on sales tax notes. I'm sorry, the Type A, Type B, it's called sales tax notes. And for me, it's something I kind of reference back to, especially with this new Type B that should be coming into effect here this fiscal year. And I was hoping, and any new board members that have questions or existing board members, my contact information is on the bottom of that cheat sheet. Just want to highlight here for the board, we have the existing Type B fund. As I go through this presentation, the existing Type B basically has about 3 different checkbooks or funds. And so the Type B fund, as it was, has a 1.8 cent sales tax. And of that 1.8 cent, 50% of that sales tax goes to economic development. Then the next 500,000 of the remaining 50% goes to the housing fund, or the housing checkbook. And then the remaining balance of that goes into the streets fund, or you can consider that like its own little checkbook. In this new fiscal year, we do have the Type A's that were voted to be repurposed for new Type B's. So the Arena Type A fund was voted to become the Facilities and Arterial and Collector Streets Fund, which is a total of 1.8 cent sales tax. And then we also have the Downtown Seawall Type A fund, which will become the 1/8 cent sales tax for the seawall and citywide flood control fund. This presentation does include those new funds that are to be created for the new Type Bs. On a budget basis, the new Type B for the Facilities and Arterial and Collector Streets Fund was supposed to commence October 1st, 2025. After all the documentation needed to be filed with the state, we received communication from the state that fund should go in effect January 1st, 2026. So what you'll see is you will not see any, you'll see budget from October through December in the presentation, or October through November with no actuals. The actuals for that sales tax is sitting in the Arena Fund. And so although we are not able to collect or not repurpose those funds yet, commencing in October, we still continue to receive those under the original authorization in the Type A sales tax.
Sorry. Eventually, those funds will be repurposed?
Yes, definitely, yes. It's just the timing, budget versus the approval from the state didn't line up as anticipated.
Okay.
Okay, so that's a bunch of information. Feel free if you want to talk to me afterwards, if you have more questions or want to talk about the sales tax, I'm glad to provide that. But here I'll jump into the PowerPoint presentation for the Economic Development Fund. Okay, so the first presentation here, first slide here is the budget to actuals for the Economic Development Fund. So this is that 50% of that 1/8 cent sales tax that I mentioned earlier. And we'll start here with the amended budget column and going down to the total revenues row. Total revenues budgeted for the fiscal year 2026 for this particular fund is $4.7 million. Actuals as of November 30th, 2025 amounted to $844,000. That leaves about $3.9 million of revenues to be earned for the remaining of the fiscal year. Next row we want to jump down to is the total expenditures of about $10.6 million was budgeted for fiscal year 2026. As of November 30th, 2025, a total of $334,000 has been spent or expensed. This leaves about $10.2 million of appropriations pending to be spent. Jumping to the last row, we have the ending fund balance on a budget basis. We are estimating to end the year at $3.6 million as of November. And for actuals, the actual balance is about $9.9 million. And as you consume expenditure budget, that fund balance will draw down. This next slide is started as a 5-year forecast, and we've expanded it out. We do need to update that heading. But here, I'll walk through this for the board. And the way this thing works, you want to look at your beginning fund balance column, starting with the first row of 2026. The math on this table is essentially you take your beginning fund balance, we're adding in the estimated annual revenues. We account for commitments of incentives that are coming up, and as well as administration and other expenditures that will be paid out. And this leaves an ending estimated balance available for additional commitments you'd like to make throughout the year. That's the important thing here to highlight. I won't go through every single row. What I will highlight in the next couple slides are the existing commitments as well as the administration and other expenditures. But here you can see the funds available for commitments to additional projects continues to grow. And with the conservative estimate on sales tax, we do keep that flat. To be conservative, but you can see by 2033, until we start adding additional commitments, your available funds are about roughly $26 million. This next slide comes back to is the major business incentive and small business contracts, so that $8.2 million that we saw on the previous slide as far as commitments. This is what makes up your commitments in 2026 and future years, the existing contracts. So just going down and highlighting a couple of these agreements, just some of the larger ones, we have an exports company LLC with a $1.8 million committed, $1 million committed to South Texas Military Housing, $2 million committed to the Hilton Homewood Suites Hotel, $2 million committed to Courtyard and Residence Inn, and $2 million committed to the TSA parking lot, Texas State Aquarium parking lot projects. This particular commitment was approved in December. We want to go ahead and add that here to the list just for awareness. And then you have another $2.6 million committed to small business contracts. This next slide is what's committed for administration services and operating expenditures. So it includes our agreement with the Corpus Christi Regional Economic Development Corporation, as well as the funding that goes over to the city for administrative services. Here, one of the larger expenses is transferred to the CIP fund, and I believe that it is for the Harbor Playhouse building and HVAC improvements. Okay. Next slide here is our housing fund. So this is a separate checkbook that I spoke of with the estimated sales tax revenue to be funded at $500,000. We've already funded those $500,000, so we jump down to the total revenues. Is on a budget basis, we expected $575,000 of revenues to come in. Actual revenues earned $516,000. This leaves about $58,000 of interest earnings pending to be earned for the rest of the year. Going down to the total expenditures, a total of $75,000 was budgeted as of November. Expenditures amounted to about $13,000, leaving about $61,000 of appropriations unspent. Jumping to the bottom line, your ending fund balance on a budget basis is estimated to be about $3 million. As of November 30th, it is roughly about $3 million. I do want to note here in December as well, December 8th, a commitment to the Palo Verde Senior Apartments. There's a commitment of $1 million that'll show up in your next financials. The next fund here, we have the streets and the arterial collector, and this is the last fund from the existing Type B authorization. This fund has total revenues budgeted at $4 million. Actuals amounted to $293,000. This leaves about $3.8 million pending to be earned. Expenditures amount to $4.1 million, with a large chunk of that being in the transfer out to the street CIP fund. And the next slide will cover what those streets are. Total expenditures as of November 30th amount to $17,000. This leaves about $4.1 million of appropriations pending to be spent. Jumping to the bottom line, typically this fund is cleared out and transferred out to streets, but we're estimating a fund balance of about $35,000. As of November, we have $398,000. Okay, your street CIP fund. A total of $16.3 million has been budgeted for the streets that are listed there. Expenditures live to date amount to $3.6. We do have encumbrances of about $4.8 million. This leaves about $7.9 million of appropriations pending to be committed. Okay, so here we start the new Type B funds. So these are the funds that will be the repurposed Type A. So this fund here is a facilities fund. Total revenues budgeted are 4.5. As mentioned earlier, we won't see any actuals to the month of January. And also just keep in mind when we say January, this January sales tax, we won't receive those until March. So January sales tax are earned in January, filed with the state in February, returned to the city in the month of March. Here, expenditures were conservatively budgeted at $78,000. This is an anticipation building up a fund balance of about $4.5 million. Year-to-date expenditures amount to about $15,312. The next fund we have is the streets fund. Same thing here. This is one that was anticipated to start in October. We have a total revenues of about $4.5 million budgeted. Expenditures budgeted at $4,644. Anticipated building a fund balance of about $4.5 million. Lastly, we have the seawall and citywide flood control. This particular fund is revenues are not expected to come until April 1st. The total budget here is about $4.5 million. The expenditures budgeted amounted to $52,000. We anticipate build up a fund balance of about $4.4 million. Lastly, this is our sales tax revenue update. This is not part of the presentation, a slide that can be improved. It's a little tough to look at. So here, your year-to-date budget includes not only your existing Type B fund, but the repurposed Type A funds. So that shortfall in budget is really related to those Type A sales tax that are flowing into your Type A sales tax fund. However, when we did the comparison to actuals, we included the Type A sales tax, which we probably shouldn't because those sales tax aren't in there. We'll work on the sales tax revenue update to give you a better picture of what's happening with this one. Overall, what I can tell you, is sales tax as of November 30th is up 1.4%. That concludes my presentation for the Type B. And I'll stand by for any questions.
Thank you very much. Does anybody have any questions on the report? Okay. Seeing none. Moving on. All right, item F, executive session items. The board will go into executive session on item number 3 per Texas Government Code section 551071 and 551087. We will return. You ready? Okay. All right, it is 2:44. We have returned from executive session. Is there a motion on the floor?
Madam Chair, I'd like to make a motion to deny company's request for extension of default notice and motion finding company failed to observe and obey all applicable laws, ordinances, and regulations under Section 11 of the agreement, and finding that this agreement is terminated due to company's failure to cure.
Is there a second?
Second.
All those in favor?
Aye.
Aye. Any opposed? The motion passes. All right, moving on to public hearing. Item number 4, public hearing and motion amending the Affordable Housing Project Loan Agreement with Corpus Christi Huntwick Avenue LP, commonly known as the Palo Verde Senior Apartments, in the amount of $1 million.
$1 million loan for the Palo Verde Senior Apartments at 5501 Huntwick. It's 80 units, if you recall, 80 units of senior living, 75 of which would be affordable. The $1 million needs to be appropriated into the B Corporation's budget, and while we're doing that, we would like to ask for a couple of amendments. Nothing that we feel is substantial to the agreement that was approved in December. I do want to go ahead in full transparency and highlight some of those items. You do have a copy of the red line. One of the changes that has been recommended was they would like for the general partner to be the signatory on the agreement instead of the limited partner. We don't have any issues. One of the other items that we have asked be put in is that there's an automatic termination upon the borrower failing to receive bank financing or failing to comply with applicable federal, state laws, including but not limited to the city ordinances. And then they have requested that they be given 60 days to cure any sort of deficiencies throughout the project instead of 30 days. And we didn't have any problems with that. And then one of the things, this is a mistake that we made. We have, throughout a couple of agreements now, put in some rules that apply to our federal home program that don't apply to Type B funds, and they've requested that those requirements come out of the agreement. And it's not very often that we're able to take out regulations from an agreement rather than have to put some in. And it will reduce the monitoring that staff has to do, but there are some rules and regulations that don't apply to Type B. They will still apply to the project because we'll have them in our home agreement, on our home documents, but they don't have to be in Type B as they're not applicable. And those were those items. And then of course go ahead.
Can I ask a question? So if they don't comply with that, do they still get the Type B funds?
That would, okay, so I would say it depends.
Okay.
So if it is 5 years from now and they are not compliant with a home rule, for example, a tenant's rent was miscalculated, they would be given a time to cure that. But if they default on that loan, then there are problems with the financing, right? But not everything is, not everything means a loan default. I want to be clear there. So it depends.
Okay, I think I follow you.
Yeah. So, but because these are cash flow loans, that you don't really default on the loans.
Sure.
If there's no money. So I know that's a weird answer, but yeah, it depends on what it is and whether or not it can be cured.
But you're saying there's a change. I guess looking at the loan, the red line changes, it's on the income limits of who is living in these apartments as well as.
No, they're still 60% and below.
Okay.
But Type B refers to a certain section of the federal code. It does not refer to the home section. Home units are actually tied to 80% limits. This is more restrictive in the way everything's being written at 60%. But there's the federal income limits and rent limits, there are different limits. We're specifically tied to the home rent limits under the home program, and these, it's section, Jackie, I don't suppose you know off the top of your head. 14,
But
I don't know the federal reg off the top of my
I
head.
thought that there's a home loan of $1 million, correct? And so, and they were saying they still had $1 million shortfall, which is why they came to type B.
Yes,
And so they still have to meet the home loan requirements for
Yes.
that $1 million.
and we're going to take care of that in the home loan documents.
So
There are 2 sets of loan documents.
if they no longer meet the home loan requirements, isn't our loan kind of contingent on that because we're coming in behind it?
Actually, you're going to be in front of it. What we did last month was determine that the Type B board wanted to be ahead
The
of the
first
home loan.
lien? But, so if they lose the $1 million for the home loan,
Okay.
the way this project was presented was they needed both loans.
Oh, yes, so they do need both loans. The things that are being put in are, most of them are during compliance. So for example, if we are in year 3 and there is a deficiency in a home tenant income file, they counted income that they shouldn't have counted, or the rent was $30 higher than it should have been. That's not a default, that's a monitoring finding that they can cure on the next lease up or by reducing the rent. Not everything is necessarily a default on the loan. So we are not going to issue, because there's a home loan violation, we're not going to issue a monitoring finding on both the home side and the Type B side if the one rule only applies to the other. Now, it doesn't mean that one doesn't impact, but it's not necessarily a default on the loan when it's a monitoring finding that can be cured.
So overall, does the project still have to meet the home loan requirements?
Yes.
Okay, so we're not easing any income levels here
No.
with the changes on the Type B loan. They still have to have the home loan under their $1 million agreement.
But what we are doing is releasing an administrative burden of having them having to document twice and having us monitor twice and making sure that everything applies to both loans. If it doesn't,
Okay.
that's all that's happening.
Okay, thank you.
But there are those other items, the cure from 30 days to 60 days and the change from the limited partner to the general partner that's signing, but those are not anything substantial for us.
Yeah, I think,
But there is no meaningful changes here. I'm just trying to be transparent.
no, I appreciate it, and thank you for the clarification.
Yes, ma'am.
I'll make a motion to approve the amended contract.
Okay, we need to have a public hearing.
Oh, sorry.
Yes, public.
My bad.
All right. I need to open so sorry. Do we have any other additional questions? Okay. Seeing none, I'm going to open for public hearing. Have we received any public comments? No. Okay. I'm going to close the public hearing, and now we can entertain a motion.
Okay, I'll make the motion. So.
I second.
Are there any further discussion? Okay. All those in favor say aye.
Aye.
Aye. All those opposed? Thank you.
Thank you very much.
All right, moving on to item J, Executive Director comments. Do we have any comments? All right,
No.
seeing none. Oh, I do have a quick question. We've discussed having a workshop on Type A and Type B going forward. Do we have any update as to that workshop being scheduled?
We have not discussed any dates, but we can go over that this week and come up with some options, maybe set up a meeting
Okay.
with yourself and.
I think we'd like to see that before the first quarter closes, so it can impact things going forward. So let's get that on the calendar, please. Thank you
Sounds
very much. All right, there being no further business, this meeting is adjourned.